Hi friends, this is Kishore. Welcome back to my channel. This week market closed at red. Will bull take the lead for the next week and make a move higher? Let's see. And this week I would like to cover market index analysis, China stimulus and warfare, dollar and yields, earnings, seasonal chart, market breadth stats, big funds money flow data. This is not a financial advice, just for knowledge purpose only. Let's jump into the show. So the CNN Fear and Greed Index, it went to the extreme fear because of the huge drawdown in the market. And this is the heat map, daily heat map. Amazon and Meta thick green. We can clearly see Amazon because of the earnings. Amazon made a huge run. And this is bubble chart, daily bubble chart. We can see the bubbles. Some of them are floating and some of them are under the water. So okay, Amazon, Meta, they made a huge run, and also Intel. And here you can see Enphase, Ford, they went down. And this is week heat map for weekly. We can clearly see most of them are red, and Google exceptionally Google, it's almost 10% down. It's not quite often happens. And this is ETF weekly heat map. We can clearly see the fixed income section is going green, maybe because of the war issue or war fear, money is moving to the bonds. And this is weekly sector performance, again the same. XLU, the defense sector, is in green, rest of them are all in red. And this is gold. So because of the war issue, war fear, last couple of weeks the gold is ripping higher. If it crosses 2050, then I can see 2100 is the first resistance, and the support is 1950. And this is TLT, 20-year bond, treasury bond. This week is a little bit green. It took a support here 82 and little bit bounce. So because of the war fear, money is moving to the bonds. And this is Nasdaq pre-election year seasonality chart. We can clearly see the black one is the all years and the purple is the 2023. Right now we are here. If the current year follows the seasonal pattern, then we can rip here next 3 months. And this is S&P 500 pre-election years seasonal chart again. So the black one is the pre-election years, all pre-election years, and purple is the 2023. Right now we are here. If it follows the pattern, then we can go higher. And this dollar index, last couple of weeks, it's a weekly chart, last couple of weeks it's going sideways. If you go higher like 107, then it's a big drawdown to the market, otherwise it's okay. And TNX, again, as the bonds are going higher, a little bit higher, TNX hit a little bit of small drawdown from 4.8 from the 5. If it goes down, it is really good for the equity market. And China announced it, like they already announced the stimulus, and looks like they approved it. It's almost like 1 trillion yuan, which is like $137 billion. If it really comes into the market, that's a big thing to the China market, and also the money goes to the outside of the market too. But how do they get that $137 billion? Do they even sell more US treasury bonds or not? That's the big question. And this is next week earnings. So some of the earnings I'm very interested, like SoFi, AMD, Pfizer, Caterpillar, PayPal, Roku, Qualcomm. The SoFi is like for the student loan, how the student loans impacted the SoFi. And few other like Airbnb, because of that real estate issue, the Airbnb, how Airbnb is performing. And Apple, and also Square. And this is how the different sectors are performing in the S&P from last this year, from January to till now. So you can clearly see here XLU is drawn down like minus 14%. Real estate is also down minus 10%. Only very few are up, like XLC, communication sector, technology, and discretionary. These are the only up, huge up in this year. And this is by industry. You have how the industry, each industry is performing in this year. You can clearly see the TAN is a solar one. It's a big drawdown, and also KRE regional banks also down. And Jets and VNQ is the REITs. They're also down more than 10%. Only very few like semiconductors, software, and internet. These are made the huge run this year. So if market goes down, so this industries may hit big because they are already down. And this is my one of the indicator, number of stocks in the S&P above 20-day moving average. Whenever it hit a 14 or 14.5, this is it may S&P made a uh, swing low, short term swing low. So looks like that's what is happening now, but we'll see that S&P chart. And this is the number of stocks above 200-day moving average in the S&P. Right now it is at 24. If it hits 14, it's a very good chance for the S&P to bounce. So it happened in the last year September, and last year June, and also March 2020. And this is a bullish percent of the SPX. We can clearly see it's a very big drawdown compared to even from the lower than the March. So there is a high chance, because there is a positive divergence in the RSA, there is a high chance S&P can bounce from here. And this is a bullish percent of Nasdaq 100. Again here, this is also big drawdown compared to the March. March is here very close to the March drawdown. So And also again here the RSI is positive divergence, so there is a high chance to bounce the Nasdaq. And this is bullish percent of technology sector. So you can clearly see here it's almost like almost very close to the December of 2022. So there is a chance to bounce here because of that positive divergence in the RSI. And this is bullish percent of discretionary consumer discretionary sector. So it made a little bit positive divergence here, and the bullish percentage compared to the chart. So and this is a bullish percent of financial sector. So it's not as bad as in the March, but it's still going down, and RSI also is going down. So there is a high chance still it continues. The financial sector can go down. And this is SPY. This is a monthly chart. I put a 20-day moving average. So right now, on Friday, it closed below 20-day moving average. It should, if it closes below 20-day moving average by end of this month, that's not good for the S&P. But if it closes above, then that's good. So and this is weekly chart. So according to the Oliver Kell, like if the 10-day moving EMA crosses 20 EMA, then it's not a good sign to the SPY. It says the start of the downtrend. And also last week I mentioned 413 should not break for the cup and handle pattern. So it break the 413 level. So my next levels are 403 and 390. I will talk about this 380 level when we cross, if you go below 403.98. And this is weekly chart on the S&P. So you can clearly see here I put a MT for MACD indicator. So this is one of the indicator I see for the S&P uh, going down, or S&P taking the turns. So one of the section here, you can, when the market is going down, there is a positive momentum here. That's where the we need to look at. So market is making the turn, but right now here the market is going down and the momentum also going down. And this is S&P weekly chart. I put Fibonacci levels. um, so you can clearly see here right now it's a very good support of for 410 level. If it breaks, then we can see the 380 level. And this is S&P daily chart. I put a Fibonacci circle. So it helps me to find lower lows and lower highs. So right now it's at very good support in this circle, like 4.618. If it breaks, then it goes to the 5.618. 5.618 is almost like a 404 kind of thing. And this is QQQ weekly chart. Again, this also 10 EMA did not cross the 20 EMA, but it is very close, and the weekly volume is extremely high, and CCA is really going down. And I did not see any bounce here until and unless it makes some kind of bounce, a positive divergence kind of thing. That's good for this QQQ. Otherwise, there's a high chance it can still go down. And this is QQQ daily chart. It bonds at 342. So if it breaks 342 level, then it can go to the 337 level. Otherwise it can still go up, because the CCA in the daily chart, CCA is turned positive. And the IWM weekly chart, we break that 165 level, and it's going at 162. It should come back 165 level, otherwise it can still go down to the 157. And this is one guide index funds. This is a money flow chart. It tells is money is moving money is coming into the uh, big fund, S&P 500 or not from the Vanguard. So right now it is flat. It's not going down. It's not going up. It's flat. We need to follow this chart carefully. If it is going up, then it's a good sign, because every quarter they allocate some money, and then next 3 months that money will be used. But right now it is flat. So I'm eagerly waiting what will be this chart shows in the next week. And this Vanguard World Fund Mega Cap, the money is going down. The money flow is going down clearly. So this is very concerning to me for the mega cap stocks. And that's all for today. So right now the breath stats saying there is a small chance to go high, but the warfare, as we already seen, the money is moving to the bonds and the gold and the defensive sector like utilities. So this tells the warfare is there in the market. Until and unless the warfare goes out, there's a very small chance to market go higher, but there may be chance of small bounce. So that's all for today. Hope you like this video. If you like this video, please hit the like button. Please watch more videos in my channel. If you like them, please subscribe. Please share this content if any of your friends looking for similar kind of content. Please hit the bell icon so that you'll get notification whenever I upload a new video. Thanks so much. Bye bye.